The Fed's footprint has gotten too big. It's also saying the Fed has undue influence on the economy. That's any 1.25% increase in the quarterly distribution.
Hold on, I got it. Yo! What am I missing? Hold on. Oh, I didn't even, hold on. 1 second. How did I do it? Mario, looks okay, right? Everything's showing okay and you hear me okay? It seems to be okay. So I can get it out now. Good now? What was the problem? There was something wrong? Yeah, I didn't say anything. Hold on, I gotta organize this a second. We'll give a couple minutes, a minute or two, let people figure out there's not a problem anymore here. What the hell did I do with it? Let me see. Oh, here it is. All right. Are we good now? Is anybody in here? I see you, Mario. It looks like it's broadcasting to Twitter, okay? X, whatever they call it. Yeah, it's on X. There we go. YouTube, everything good? What's up, Struck? Jeff Manning! They come out in a dime package. All right, let everybody straggle in here, and then we'll get going. Let me mute this guy too. This Trump Powell visit post-market comedy, classic. Classic. Dow Chemical. Would they have earnings, Jeff? Probably had earnings, right? I mean, the bulk of Dow Chemical. Oh, I see it. Yeah, down 5. Earnings. Hi, Senga. I love it. So we'll get going. Usually at this stage, a lot of times I cancel these webinars because you guys know when into the heart of earnings season, I kind of go dark. I try not to do a whole lot. But there's a lot of things worth keeping an eye on anyhow right now for the next week or two. So there's been a lot of action in names. Obviously, it's important to keep tabs on the overall market. A lot of the signals that we look at as the rallies continue to stretch. And we'll talk about, a little bit of what we've been seeing recently here and what's likely to continue. I call it the heart of earnings season, and it's next week, basically, where all those big names, the bulk of them report. And the reason why that's significant for the flow, for those of you who may be curious, why I try not to pay too much attention or put too much weight into any of the sweeper activity until we get through that point, is because you got some high beta names there, right? You got some market moving names that make up a big portion of the index weighting wise. And technically, right, say you're running a book, there's earnings risk on everything right now. Even it doesn't have to be the name that you hold a position in. They could be reporting in a month from now. But because you have names like the Apples, the Metas, the Amazons, and all that reporting, they're going to make a dent on the indexes, Microsoft, and could have an effect on your name. So you see a lot of, during this time, flow-wise, you see a lot of stock replacement, especially coming off a strong rally like we have. A lot of people a lot of funds taking principal risk off the table, right? Quick example, if I got around ballpark number $1 million in ABC, right? Any ticker, and we're going into the heart of earnings season, may make sense for me to take some principal risk off, right? Sell the equity position and replace it with some of that money in calls with some time. So you see a lot of that, and there's undoubtedly an uptick in that type of action in hedging that really skews the flow, right? It's really difficult to find pure, clean, aggressive, directional betting. And that's the type of action that we like to pay attention to, because that's what creates momentum, and that's where, the type of action that shows conviction. So that's kind of the logic behind trying not to put too much weight into the flow over the next couple of weeks. Now, there is stuff to kind of look out for in the flow. If a name is seeing action in weeklies, right? Maybe something that can create momentum now and is worth day trading, or even, if you want to take the chance, hold overnight for a day, see some follow through. So that's more the type of action. You're not necessarily looking for quality. You're looking for something that can create momentum now. That's where kind of the real edge is out of the flow during this time period for a couple of weeks. If that's not your bag, what you're kind of looking for is you're looking forward to post-earnings action, right? So now as names report, like who was it just mentioned? Jeffrey mentioned Dow Chemical, right? Maybe it's a name he's been eyeing, doesn't want to take on the risk of earnings, wants that to get out of the way. Now you got some weakness and you see some Dow Chemical sweeps come in. That's kind of what you're looking for here if you're not an active intraday or more tactical trader out of the flow. Okay. Again, that's my opinion, right? And what I've learned in following this for as long as I have. But as you can see, you have people on social media. Flow is as big as ever now, right? Who are touting sweeps or blocks or all sorts of buying in everything, even during earnings season, like, it's equivalent to the initial buying we saw 2 months ago. So again, I'm just giving my opinion, to each their own, but just so you know where I'm coming from, okay? And it's really interesting because now, again, we have a market where we kind of left off the last webinar, just to kind of get everybody caught up here, where the concern for me, right, personally, of some of the signals and the action we were seeing was more so on the speculative end. What I was worried about is kind of a replay of 2021, if you remember. I really wasn't concerned about big picture positioning or sentiment or anything related to that. I didn't think we were even close to getting to overcrowded, overheated state. It was more so on the speculative side of things. And here's the thing too, right? It becomes, the reason why I get a little bit cautious is because the longer that goes on for, it can have an impact on the overall indexes. You start to see de-risking in other things. If you rewind back to 2021, okay, if I'm not mistaken, it was March or May when kind of we were going through, could have been that time period, we were going through that meme stock craze. And here, I can pull it on the chart. You can't even notice it on an S&P 500 or NASDAQ, the pullback that followed. It was a quick pullback. It was across the board. What we started to see was, as those speculative names continued higher, right, as they continued to squeeze, you started to see some of the more quality names sell off. Okay? And that was a sign of some trouble coming out of this, right? Ultimately, you had a nice little quick rinse in the market. It was the top of these meme stocks and that retail craze, but the market itself continued higher. All right, the market continued higher for the rest of 2021. So it didn't have this dramatic effect, but as long as it gets nipped in the butt sooner than later, right? The quicker these things kind of lose that frenzy, the better off you are as far as overall status is concerned. Okay. So the way I was kind of looking at things and the way I was playing it as we were going into earnings season is if things continue to strengthen, right, in the overall market and some of these spec names continued higher, I would try to utilize that strength to take off some more risk, right? So sell some more of my long exposure, which I did, right? I think I mentioned to you, I don't know if it was in between that. SOXL, I had a position in on the semis. I clipped that. So I'm out of that, right? I'll go over some of the moves I made, but that's the way I was kind of approaching things. And I think it lined up well as we went into earnings season. Okay, because now you got that earnings headline risk involved too, to utilize any additional strength and take some risk off, right? And at the same time, I'm not looking to put on any new exposure here until we get some sort of rinse or we get through the next few weeks of earnings and reevaluate, right? I'm not chasing is what I'm getting at, right? Even though they continue higher, some of these names, I'm not chasing a name that we've played 50, 100% ago and buying it because it's going higher now and just for that reason, okay? So that's kind of the way I was approaching things coming into earnings season for the last couple of weeks. That being said, okay, we kind of slowed down a bit this frenzy, right? Over the last couple of days, that the frenzy and kind of these meme stocks really died down. Riff Raff got really hit over the head, chasing some of these names like an Open, which went from what was it, 50 cents to 5 or 4, and people are buying it up there. Coles, right? Stuff like that. So kind of hose that down a bit, which is good. And we'll see what this looks like going forward. Again, for me, it's more of a wait and see on how things shake out over the next few weeks. Ultimately, I think we get a clearer picture as we get into August, right? Ideally, if we get some sort of little rinse in the overall market, right, and these speculative areas, and just a little pullback, a week of pullback, I think that bodes well. I think it even kind of takes that risk out seasonally, potentially for that August, September sell-off that a lot of people are talking about now, right? The more and more they talk about it, one or two things happen. Either it doesn't happen or they front run it, right? And it happens before everyone's expecting it. So if we do get some sort of pullback here, earnings related or whatever, I think that ultimately is a good thing, okay? Why do I think that's a good thing? Because from the stuff that has allowed us to feel bullish, right? From the liberation lows. You know what I was looking at the last couple of days? A buddy of mine pointed out to me. He's nuts because he kept them all. And I don't want to single out anybody. And I made that mistake. I posted who it was from on Twitter. But you guys remember like it was yesterday, right? Into the late April lows in the market. Are you tired of winning those memes? I guess they call them memes, right? With J.D. Vance, the scrunched up, funny looking face in front of a red heat map, kind of trolling the Trump campaign as they came in and the market corrected. And it was just out of control, right? It was out of control. Now, a lot of emotion goes into that, okay? And I'm not even talking politics here. I'm just talking, no matter who it is, okay? There's a lot of hatred behind these politics. And you had so much of that going on into that correction. I think the main issue out there, and you hear it from a lot of money managers out there, is to try to get people to start to feel bullish who politically really hate this whole White House, right? Hate everything they stand for. And, it takes a lot. That's the problem with emotion in this game. When you bring emotion into this game, you're a dead man walking. You have no shot, right? Because it's going to bite you in the ass. It's going to affect you in some sort of manner. And you're not going to be able to adjust to the market when needed. And I think that's what you got going on is just a lot of money out there that has been rooting, right? They got a little taste in their mouth in April with the market selling off. They've been rooting for the demise, to blame it on this White House, that it's left a lot of money on the sidelines that still hasn't got in yet, right? And you could say, how, right? This market's going higher. You got meme stocks going crazy. I think that's exactly the point. You have meme stocks and all course from retail. These aren't institutions pushing meme stocks, right? This is not quote unquote the smart money chasing meme stocks. And what we're seeing is a lot of that smart money, right? And it's institutional money, professional money, is still not taking the bait. Just still not taking the bait. All right. So I think that's the perfect segue to what we're seeing here. And you can see kind of where the risk is, more so on time frame, and why things still line up to be bullish if we can get any little weakness from, again, whatever it may be, earnings related, or anything else. Okay. So let's start off. I tried to keep this chronologically lined up, but I screwed it up anyhow. But I did it to the best of my capabilities at this time of the day. Here are some of the short-term indicators we look at, and that's where all the heat is. Okay, so the majority of what you would think is the market being too bullish here is on trading and more tactical time frames, and that's not unusual when you got a market price action wise that's as strong as it is. Right, you got a lot of quick money out there. Okay, they see some strength, they want to be a part of that. Okay, even more so if they've been on the sidelines and missed this rally. But as soon as weakness, right, as soon as a little volatility shows surfaces, they're just as quick to get out. We've seen that time and time again. Okay, so a lot of the heat's on short-term time frames, and this is one of them, the short-term composite indicator. Again, coming into today, approaching that 80 mark, that's really hot on a short-term level, really hot. Okay, so the takeaway is higher probability of at least a choppier environment, if not some sort of quick rinse. As you can see, we've gotten there a couple of times in recent weeks and got some sort of either consolidation or rinse to kind of hose it down a bit. Okay, so chasing here, there's that added risk on short-term timeframes. This is our tactical sentiment. As you can see, approaching the red, same thesis there. This is from Sentiment Trader, kind of internals. And we've seen a little more rotation, and we'll talk about that quickly in a few minutes. But as rotation out there gets a little too hot over the course of a few days, you start to see heat show up in certain sectors, right? So like recently, the utilities, after, they caught some decent news again. I think it was TLN and some of the energy related electric news, right? That came out recently the other day as far as some of these nuclear names. So XLU, you can see, right? Or a bit overheated. Materials really had a nice bid the last few days, right? A lot of metals and mining, a lot of those things, they got a bit overheated. Industrials, they actually even seen some institutional buying, hedge fund buying, believe it or not. So you can see those groups got a little too hot over the last few days. And like today, we saw money, yesterday into today, rotate back into NASDAQ and tech, right? And you see that, I think we're going to see more of that as we get into earnings here. And even more so, earnings reactions are going to dictate a lot of that moment rotation that we start to see. Okay, but again, if you look at this just quick glance, and that's what I like about a lot of these things, right? Example, in April or the start of May, this thing was lit up in all green. Okay, and now as the overall indexes make new highs, you start to see more and more red show up, right? Then we get a little consolidation or a little rinse, and it starts to clear up. Okay, so you can see some heat out there. This, I think we talked about last week. I know we talked about it in the Steve room. This is like kind of the sentiment cycle, I guess, in layman terms, meaning that sentiment was extremely bearish into the lows back in late April, and that cycle has played out here. In other words, that cycle from extreme bearish sentiment readings into the lows of late April, this is what this indicator is showing. Now, just because that cycle played out doesn't mean the market tops out and we go into a bear market. Okay, what we see a lot of times is when after it plays out, you see some congestion, you see some consolidation, sometimes maybe even a little pullback, right? Very easily could lead to that, but doesn't necessarily mean the highs are in. Okay, it just means that that cycle has played out, and usually you get at the least some sort of consolidation or dip beyond that. And you can see that on this chart here, right? Doesn't mean highs are in and the cycle is completely over. Just it has played out, and you usually get a little bit of a pause, I guess is the best way to put it. Okay. Now, again, those are a lot of like shorter term, I would put into that column, right? More tactical trading sentiment readings. Here's some of the big picture stuff that we've been paying close attention to, right? This is the stuff that got me, concerned coming into February earlier this year, right? So this is the stuff you want to try to avoid holding too much risk if they start to flash caution. This is the Deutsche Bank consolidated positioning indicator. Okay, we're just crossed over neutral there, so still has plenty of room. And again, if you do get any sort of little pullback, this would come in, buy some more time, right, to play out. Next thing here, going to the point I mentioned earlier, like money managers, right, who haven't been a part of the rally, starting to get involved. It's just not happening, right? This is from the fund manager survey at BOVA. Money managers that are overweight equities. Look where you're at. Look where you're at here. All right? Nothing. This is at BOVA as well. This is this week. Okay, fund flows this week from BOVA clients where there was some buying, as you can see here. There was some buying this week, the light blue. Okay, where'd the buying come from? Retail and corporates, and you got a little bit of buyback because the buyback window has been closed. That's going to open soon. Okay, hedge funds, look what they've done. Okay, the past month, 4 weeks is in the dark blue. Past week is in the light blue. No interest, right? Institutions, long only funds, no interest. I mean, it's incredible. So again, you have all that ammo on the sideline. Okay, it doesn't mean it has to come in tomorrow, right? And they more than likely is going to be some sort of catalyst that draws this money in. Could be maybe when we start to get rate cuts or the macro picture starts to improve. Some of these other groups become interesting to them. Okay, but I think the more important takeaway for us is that even if it doesn't chase, okay, when you do get a normal pullback correction where the market pulls back just because on a short-term basis, retail or traders in general got a little too excited and they get hosed down, that becomes a buying opportunity, right? That's something where if you're holding positions, you want to try to hold through. Possibly the only thing you're going to do is raise some money to buy that. right? You don't want to try to get in cash to avoid that because you think there's a lot of damage that can come from it. Okay. When you have that type of ammo on the sideline, they're more inclined to be buyers on pullback because one, they don't have much to sell, and two, that's what they're probably waiting for. They're probably waiting for a pullback to buy, right? They don't want to chase. So that's still in play here. This is from Goldman. This is the vol panic index indicator that they throw out there on a weekly basis. VIX looks low, right? VIX looks extremely low, a little concerning. The vol panic index is halfway down to where we were coming into the 2024, right? So there's tons of room here, tons of room, if they really want to unwind volatility in the sense. Now, again, doesn't have to happen in a straight line. You understand? But there's still a lot of uneasiness out there, is what this is showing, even with the market doing what it's doing. This, again, at a Goldman, quote unquote, professional money, smart money. They've been on the sidelines for a big bulk of this rally. They're more of macro players. So, like, if you start to see, and Goldman makes the point here, if you start to see the Fed cut rates, that's when you'll see this crowd start to add some leverage to the picture. Okay. Again, that's some money on the sidelines that can come into play here, right? And if you remember the conversation we had a few weeks back, maybe a couple of months now, the weeks fly by. But to me, that's ultimately the biggest risk to me still, right? Is not the left tail downside. It's the right tail of an everything rally, right? Because if you get the macro picture start to look better or more enticing 6 months out, okay, that's where this money starts to get put to work. And you got a lot of it, right? You got a lot of it. And what that risk would look like, again, not tech necessarily blowing up and crashing, right? But tech as a whole start to underperform other things. I know it sounds crazy, but it happens. It happens. Okay? So it's not like the AI picture goes away, right? But what you'll start to see is more of AI mid-caps or tech mid-caps start to outperform some of the mega cap names, right? Or small cap tech start to outperform some of the mega cap names. So to me, that's still, I think, again, out of all the risk out there, the biggest risk is on that right tail of an everything rally that has some stuff that's just been neglected for so long. We're seeing a little bit of it, right? A little bit of it, just a little taste we're getting again here. IWM has been outperforming here and there, right? But that's nothing. That's nothing, right? Because you can see there hasn't even been any real money be put to work yet. You start getting long-only funds, put some real money, real positioning behind these things, it looks completely different. It looks completely different. This is going to be the first thing to flash caution, okay, is the systematic funds. Now, again, they were the first, if you remember, to flash buy signals into the correction in April. Okay, to refresh everyone's memory, they got to a max short state, right? These systematic funds where even if the market traded lower, even if the VIX traded higher late April, they had to do buying than selling because they were already max short. Okay, you're going to get to that position with this crowd on the opposite side in a couple of weeks here. And some of you have seen this chart I posted, I think it was a week ago from UBS. Their model has buying for another couple of weeks. And then you're going to start to see some of these CTA flows skew to the more bearish side. Okay, meaning in a flat to up tape, you're not going to see much buying from this crowd anymore. You probably see selling. Okay, now again, that doesn't mean that the market has to top out right there that minute and reverse. Okay, it's a risk. Now, if there's a catalyst and there's some selling that's created, right, from a headline, some event, because now they have some supply to sell. So that's the main risk. But as far as a topping signal, many a time we have seen CTAs and systematic crowd max long, and the market continue higher, or not top out for months. Okay, that's where they pick up the money, by the way. Okay, where they make money, they're trend followers, is where they aggressively add long exposure and sit. Okay, they don't make money in range-bound choppy markets, right? Because what happens when they get max long? There's a correction. Right? When they get short, there's a rally. They get chewed up in that environment. Okay, so the bulk of their money that they make is on the long side primarily, and it's being heavy long and sitting in the trend. Okay, on the bearish side, they usually need a bear market to make money and benefit. All right, so what we like to see is once this starts to flash, a caution signal or a sell signal, one, where does all the rest of the positioning, how's that line up, right? When that starts to flash caution, and you pay attention to key levels, key triggers, as they call them, on the downside, because they don't play off emotion. If S&P 500 breaks certain levels to the downside, that's where they become sellers. Okay, so we got another week or so here before this is even in that category, but they're going to be the first to kind of play out here from max short to max long, which is incredible. And this is what it took. Okay, this is what it took to get there. Think about it kind of like if we were talking, you remember the best case scenario was instead of this, you get, this, then this, then this, right, then this, then this. Because for that whole systematic fund extreme to go from one end to the other takes a decent amount of time. So it allows you to buy these pullbacks and consolidation and these dips along the way. And you pick up some nice money that way. Here, almost like in a straight line, I mean, we basically just saw, right, how CTAs and the systematic funds can go from one extreme to another when the market's in a V-shaped recovery like it has. What else we got here quickly? I think I have a film. This came out today. And again, this is not gospel to me, but run-of-the-mill survey sentiment, AAII, comes out every week. Into July, started to creep higher. You're like, all right, in another week or two, these guys are going to be really, really bulled up if this market continues higher. No. Right? Kind of stalled here now. They got bullish along the way up begrudgingly, right? Because the market forced them to get bullish. And now, it's rallied too much, or the market's too high, or PEs are too expensive. Right? They find every excuse in the book not to be bullish, and you start to see this thing dip into the 30s again. So even just these run-of-the-mill survey sentiment measures are nowhere near any extreme that you can make the argument the crowd's too bullish. Okay? And this is the last one. And this is in the futures market. And I think this is one of the main things I like to keep an eye on here. You got the spec crowd, right? You got small specs, and then you got the large speculators, which are hedge funds, basically. This is showing hedge funds. Okay, hedge funds are still net short S&P 500 futures. Okay, they're still short. Just to give you an example, here into the start of the bear market in 2022, they were chasing and getting long into those highs, right? As you can see for a while now, since the bottom of 2022, every time they've dipped their beak on the long side, again, any little shakeout and boom, they're trying to catch that short trade. Okay? Just like the bears you see like on social media, right? Market will go parabolic and then you get 2 down days and the perma bears are out there pounding their chest. All right, okay, here we go. This is the big one. But, we haven't seen any case here. The market hasn't forced these guys in yet. So there's no self signal out of this. Here are Sharpies. Okay. Again, these are commercial hedgers. Okay. As conservative as you're going to get, their goal is not to make money, it's to hedge. Okay. But at extremes, what they do is they take off hedges, and that's a strong signal, right? When hedgers remove hedges. Okay. You have a market here that feels euphoric, right? Feels really bullish, and hedgers have no hedges on. Okay, let me repeat that. Market right now, we're going into tomorrow, another update, and hedgers have no hedges on. I think that speaks loudly, right? And the reason for that is not necessarily pricing, that prices haven't rallied enough, or it's the reaction to the price action. Okay? What the main takeaway from that is the other side of the positioning is nowhere near any extreme, right? If hedge funds were at a bullish extreme, if riffraff, small specs were at bullish extreme, hedgers would be down here. Max short. Even with the market rally, we've seen them. They can be early. If positioning is crowded, they don't want to hear it. They want to make sure they're properly hedged. They'll spit on any further upside, right? They don't have any hedges on it. And I think that says a lot. So, these are the things we're keeping an eye on. This is in VIX. This is Sharpies, as we like to call them, hedgers in VIX futures. And they always have VIX exposure on. Again, they're hedgers, right? You hedge with VIX. What was interesting is they had a short position, which is rare in VIX futures. Now, as VIX has come in, you can see little by little, they're starting to add some VIX exposure on. Not to any extreme yet, but they're taking advantage of this VIX weakness to put back on some VIX exposure. So these are a few things that I'm keeping an eye on. They update weekly. It's going to give us an idea of when we need to be worried about overcrowded positioning and concerned of a pullback being just, more than a pullback, more than just your normal pullback. Okay, so everything, just in case anybody who's new out there, okay, everything we just looked at, right, to put a bow on things here, doesn't mean the market can't pull back if Apple misses or Amazon shits the bed next week. Okay, that's not what it means. Okay, what it means is that if we do get a pullback because of that, we should look at it as a buying opportunity or as an opportunity to look for long opportunities out there. Okay, we can certainly have some selling over the short term, right? We looked at these short-term indicators, they kind of heated. Any little excuse for some selling certainly can show up, but that would be a good thing and not necessarily the start of a bad thing. That's the important takeaway. So the proper way, I guess not the proper way, but the way I try to use this stuff is that's not going to make me go and chase it right now, right? Especially into earnings, especially names that we've traded already, and some of you a gazillion times, and they're up 300% from where they were. right? But let's see how some of these earnings shake out. And I promise you, there's going to be enough companies out there that either have run too much and they sell on the news earnings wise, or they miss the mark and sell off, where there can be some decent opportunities, especially outside of some of the tech names and the big names that you guys all know, right? I mean, I saw like a lot of you talking about some of these home builders and housing names, some of these commodity related names, right? These mineral names that really got hot this year. Okay, any pullback there off earnings, and we start to see some aggressive buying show up. That's where the opportunity is off everything we just looked at here. Okay, not just slamming buy tickets in every day just because. Anything can happen over the course of a week, and it means nothing. Yeah, Alan, this is COT. I put it in my gambling layman terms. This is COT positioning, CFTC, COT positioning. So hedgers are commercial hedgers. Sharpies, I should say, are commercial hedgers. I look at it a little differently than some other people look at it, because people use it differently. But it is COT data, to answer your question. Okay, like this here, what this is showing here, Alan, is commercial hedgers net exposure in equity index futures, all of them combined, right? So showing that this is a little above zero, they have net small net long exposure in all equity index futures combined as a whole. Okay, here into the 2022 bear market, this was excessive. This was extreme, very rare. They aggressively built a long position into that 2022 bottom. Okay, and on the flip side here, it's showing that they were hedged. Right here, the market didn't top out exactly there, but they were hedged. Okay, then right before it topped out again, you could see they aggressively added more hedges on. Here, they're not doing much of anything. And yeah, that may not be a buy signal per se, but it's a bulls. To me, it's bullish because there's no hedging yet in a market that's kind of vertical. Yeah, and that's where Alan, people use it a little differently than I do. I don't like to get too wrapped up in the individual indexes and how certain players are positioned. Like right now, the Russell is more bullish than others. Not to say you can't look into it, but for me, it's not the same type of signal, But right now, to your point, like the Russell futures are the most bullish setup positioning wise as a whole, out of all of them. So they've been less long NASDAQ, right? If they add hedges on, it's usually NASDAQ futures. And if they're adding long, it's Russell futures. So that's kind of been in recent weeks, the positioning there. Again, you see how I use it. I like to look at it just as an overall big picture signal because it tells you in itself, it's telling you about positioning just off what they're doing, right? The reason they're not aggressively hedging is because the rest of the crowd is not aggressively long. It's that simple. No matter what the market does, if the crowd is aggressively long, for shit sure, hedgers are going to be hedged, right? So them not being hedged here tells us that positioning on its face as a whole is nowhere near any bullish extreme yet. Okay, but good question. Anybody else have any questions regarding it? right? So again, the main takeaway is that I think the bullish backdrop continues, right? Yes, things have gotten a little heated here on a short-term basis, right? Especially in some of the spec areas. So you want to be careful there. You want to be smart about it. But at the same time, you still want to lean bullish and look for opportunities off any sort of weakness if we see it. Again, it may be, stock selectives. It may be on a name by name basis, especially as we go through earnings. But that's where we want to look for opportunities. Okay. Because going back, we may see kind of what we've been seeing on the rotation front. We may see that through the rest of July into August. And then this is what I'm talking about. Like today, you have the Dow down, the Russell down, NASDAQ up, right? ES kind of flat, but the NASDAQ names in ES helped it out. The past few days, you had the opposite of that, right? You had Dow up, small caps up, NASDAQ weak, right? I think we see a lot of back and forth, that type of rotation, depending on how earnings shake out over the next few weeks. So trying to get a handle on what ES is going to do, it gets a little meaningless, if not tricky, right? First of all, NASDAQ probably has to do okay for ES to go higher. But, you can see the Russell and the Dow strong and ES being down, and that's not necessarily bearish. I mean, to me, that would be bullish, right? Like, look at like RSP. We look at a lot on this webinar, the equal weight. Like you're hearing the rallies thin. And I'm not saying it's not thin, especially at times, but it's not as thin as some people are making it out to be. Like you would think it's just NVIDIA and nothing else. Right? Like I listen to CNBC and you would think just NVIDIA's going higher, nothing else. Okay. And you guys have heard me complain about thin back a few years ago, for those of you who were around, right? Coming out of the 2022 bear market was really, really thin, where just the Mag 7 was performing. This is not that. This is not that. Okay. And I think we're seeing glimpses of catch-up and participation. It's just sticky still, right? You can see we haven't seen the real money come in yet. We haven't seen that appetite come into those areas yet. If they do, it's going to be crazy. It's going to be crazy. Now, we may need to see some sort of pullback, right? Or even a correction at some point if we continue higher into August before that shows up. And that's fine. I mean, listen, all kidding aside, I don't mind that one bit as a bull, that we get more of the same here for the next few weeks into earnings. And then in late August, you get a 10% correction. And then out of that correction, that's where you get a full-fledged cyclical bull. I'd take that in a heartbeat, right? Because I'd be raising cash here as the market goes higher. And then off that correction, I got ammo to fire at things that I really like, that haven't really participated, that are cheap, right? You hear one of the excuses to this market is that it's expensive. Yeah, I mean, again, expensive, cheap, all that to me, I'm not going to say it's meaningless, but don't have as much meaning, right? Because how can you compare PE multiples today to PE multiples back in 1980? That doesn't make sense, does it? Right? So, I don't get too in a tizzy over that stuff. But when I think of cheap, I think underowned, and you got a lot of this market that's underowned. Right? The financials were a big part of that. And, Look what they've done. Right? Almost very quietly. You don't hear many people talking about the financials at all. Okay. And by the way, Citigroup, which has been by far the favorite of sweepers, right? For whatever reason, they love sweeping Citigroup. You see this stock? Look. So as money starts to find these areas, there's going to be a lot of opportunity. So that's kind of where I'm at now, what I'm looking for, and not necessarily, can the S&P 500 melt up to 7,500? Yeah, whatever. That's not where I'm going to make the money to get excited about. For me, that may be for you, whatever. You know what I mean? But for me, like what I'm looking forward to is some of these new areas, new names that can start to get attention and find money. We got a glimpse of that over the last couple of months, like some recent IPOs, or even in the speculative camp. Right? We got a little glimpse of that. So yeah, again, a rinse is needed, no doubt. But like what kind of rinse are we talking about? What kind of rinse are we talking about? If you're talking about a correction, I mean, you're gonna have. It's hard to get a correction when everybody's licking their chops to buy a correction. You understand? Tough. When we all want a correction to buy, you usually don't get that correction. And you got a lot of money that needs to buy. The PE of the NASDAQ in 1999 was 30. It went up to 50 at the top. It's currently sitting at 99 levels. Who's this calling me here? Was that the PE in NASDAQ in 1999 was 30. It went to 50. And wait, the NASDAQ now is 50? The PE? No. Is it? But again, you're looking at, look at this. It doesn't even have a PE. You know what I mean? Like, it doesn't even have a PE. So I guess it depends on what type of, we're at 30 now. Interesting. What type of player you are, Like, for those of you playing Oclo or playing any of these names, you got, like, PE, that doesn't exist in your vocabulary. So I guess it's depending on what type of player you are. But yeah, to Alan's point, he's saying that the NASDAQ multiple was 30 and 99, ended up going to 50, right? So I wouldn't get too wrapped up into that. To me, positioning is everything. In 2000, when the bubble blew, you literally had everybody and their mother's, grandmother's, aunt, godfather's mother in stock. Everybody. There wasn't a bear to be found anywhere around. You're nowhere near that in equities now. Now, you can make the argument in cryptos and memes and all that shit that I don't know and understand. I don't know. You know what I mean? But in equities, you can't make that argument. I'm sorry. You can't make that argument. And I'll tell you what, too. If you ever, and I guess this is more of maybe gut feel, but we've talked about this in the past with you guys. Even if you had the NASDAQ bubble pop, this NASDAQ rally pop, I think you would see a huge rotation, almost similar to what you saw after the NASDAQ bubble popped back in 2000, you would see a huge rotation into other parts of the equity market. Huge. You know, because you've got so much money in these big tech names, okay, because it's not worth going anywhere else. They can't find that growth anywhere else. If you had money coming out of those names because the growth is slowing, right, for that type of reason, even just some of that money going into other stuff, you would have full-fledged bull markets in so many different areas. You know? So I wouldn't get too wrapped up into all that stuff that makes headlines and is on news all day long. Okay, I think it pays to be prudent. Right, that's why I like to look at like a lot of these even shorter term indicators. Right, they don't really mean much big picture wise, but that's where kind of the money management and discipline. That's where it helps out. Right, like Joel made the point, you know, a rinse is needed here, right? Again, that's smart thing, right? If you don't shouldn't chase into this, especially names that are up and extended. Right? Wait for some consolidation, wait for some rotation, wait for better risk reward setups. Nothing wrong with that. But what I'm saying is you don't want to make too big of a deal out of it, right? Like sometimes we make it like it's A or Z, right? It's either a buy or a sell. It's either a rally or a bear market. And there's so much in between. All right. So here's what I've been doing. And just to give you guys an update, again, nobody should be paying attention to much of what I'm doing. Most of you are better traders than I am. But just to get an idea of how I'm playing these things, right? How I'm approaching the market off these signals. I mentioned to you that I've kind of been trimming some long exposure after a nice run in recent weeks as we go into earnings season. I'm still holding my IWM exposure. That's kind of my go-to big position right now as far as position-wise. But again, I have a longer time frame here too, in a sense that I'm willing to sit. Oh, I don't want to erase all that, but I'm willing to sit through a pullback if it shows up, and I'll probably add exposure into that pullback, right? So I'm trying to stay really loose here for now, with a target in mind of a test, at least a test of new highs. Then I'm going to consider adjusting the position. I probably won't get out of my position, but maybe trimming and rolling into something else related to a small cap. You know? So that's my main position. A lot of the names that I've been trading and holding, the tactical stuff, I'm out of. Haven't played anything new in regards to tactical positions because again, we're going into earnings here, and one, I don't trust the flow, and two, there's a earnings risk, right? I don't want to hold a trade through earnings. That would be an earnings play. So what I have now is just a few left. Here's a group that really hasn't caught fire yet, in a sense, amongst these speculative names. They've been grinding higher, but they really didn't have, as I like to say, their day, like some of the other hot pockets. It's these Bitcoin miners. And that's what I'm kind of holding right now. I'm holding Wolf. I got some hot. And as you can see, right, kind of a choppier grind higher, some consolidation here recently. Wolf, similar. All right. So slower. They're a lot slower of late. And another one that has seen some action, Big Deer. All right, so these type of names. So I'm up. I got a little bit of cushion in them, but that's as far as like some trading positions that I'm holding right now, trying to see if I could get lucky and find some momentum here over the next week or two. but I haven't anything new recently. I haven't everything I've been day trading solely over the last week or two. I've solely been day trading. All right. But as far as new opportunities, like I mentioned, I'm looking more post earnings, right? So after a name reports and try to pick up on some accumulation there. This one was nice. I trimmed my position there. What I have now, I'm holding longer term, so I'm not looking to touch this Galaxy. We had to deal with some frustration there for a little bit, but really nice break over the next week. RBRK, I still have that, it's a hold, long-term hold for me. It looks really good. Looks really good. I mean, you can understand here. This, look at it, right? That's a huge move. And I get it. Like if you didn't participate here and you couldn't care less, it means nothing. But this is normal where, I mean, look at this run. You get this big run and then it's got to digest that, right? And I think that's what you're kind of seeing here now. Like, this is vertical here. So this is normal and constructive, right? This is why I'm a big proponent, as you guys know, not facing into this, okay? Because if it's a position that you're not looking to flip, right? If you're not looking to be extremely tactical in, you may be up on it for a few days, maybe a couple weeks. But if you're not taking that off the table, what good is it if you get caught in this? And now you got a lot of names that we all traded that look like this, right? That just have gone vertical. So that's where you got to be careful. No matter how bullish you may be on the market, it's irrelevant, right? Look at RBRK. It's got nothing to do with the market. The market's been straight up bullish, but over the last 2 months, month and a half, the stock's been dead money. Why? Because it did this. At some point in time, it's going to run out of momentum, and even the best names are going to consolidate at best. So, I mean, again, if you're looking for a new entry here, it gets tough. It gets tough. Like, is this enough consolidation? Like, ultimately, for me, I don't base anything as far as triggers or signals to buy. Everything goes off sweeper activity. So if RBRK, we come in tomorrow and they start sweeping the daylights out of August or September calls, that to me would be your signal to get long if you're interested in getting long. But flow-wise, what we've been seeing in this consolidation, we've seen some bull flow with time. I think they might have been leaps, if I'm not mistaken. So had a good amount of time with it. But again, nothing super aggressive, just isolated sweeps. Okay, but again, I still have a position. Obviously, I got a lot of cushion because I own it all the way back here. But what I have left, RBRK, I don't even look at it. I'm just leaving it alone. I'm just leaving it alone. And I got, as you guys know, I got a handful of those type names. And that's what I have like in Galaxy now, right? So Galaxy, I trimmed down to now what I'm not even looking to sell here. The only time I'll sell these things is if we get some big picture sell signals that I'm concerned about. That type of thing. Like I'll give you an example. February, March, I sold some of these type of positions. Now, again, the correction was only 12%, but because of how uneasy I felt off a lot of the signals we just looked at, I took off weight. Yes, MBOT caught a big wave of buying yesterday. I heard there's FDA approval or something like that imminent, so be careful. Something's pending, some FDA stuff. So just be careful if you're in it. but it caught, some aggressive spec buying yesterday, maybe in anticipation of that. For a device, it's FDA approved for a device they're waiting for, Struck. Yeah, you see, like, I like these type of names. You guys know when they catch that action, but the FDA thing is risky. I mean, it's only a $2 stock, but you're probably better off buying the calls than the equity, because if they miss FDA and this thing is trading at 30 cents, that's going to leave a hickey if you're in the equity. So again, worth a shot off that buying? Why not? A lotto or something like that. I just wouldn't go crazy. What other stuff? Anything you guys are hanging on to that you haven't really clipped? These things. I mean, these names are just unconscious right now. Oklo and a lot of these names are just nuts. What's Joby been up to recently? Yeah, see, this is like RBRK. What we're looking at, that's where these things are approaching. You got to be careful on some of these things. Yeah. I like this stock, Horizon. I like this stock. It's a pain in the rear end, though. It's a pain in the rear end. This is a China AI related name that has had a nice flow now for since the April lows. They even bought it late last year, had a really nice run, and then pulled back aggressively into the April lows. But they've been targeting September, October calls, GDS. And believe it or not, it's got some institutional interest. Like, you got some funds that have a position in this thing, GDS. So, it's China. I like it. China as a whole, too, we've been seeing some nice flow. We've been seeing some nice flow. They came in, they started buying this recently, C-Web. This is the levered K-Web from China Tech. If you remember, they started buying this, which I played. I only got a little bit left in Jan calls, Yin. This was a nice mover. So China definitely has seen some interest flow-wise in these China names. The big ones, Baba as well. This guy, they continuously buy Tiger, right? A lot of these names. I just, again, preference-wise, right? I like to stress that because it's just my preference. I just wouldn't go nuts China, especially in the market, this market. I wouldn't go nuts China. Buy a Yin, buy a C-Web if you can't pick a name, or a GDS like Horizon Life. You like a name, buy some calls. I just don't feel comfortable sizing up in equity in China, for good reason. I've seen a lot of shit happen over the years, right? From Luckin Coffee to China education names that the government got involved in and crashed. So you just gotta, be careful. Be careful. VNet, that's another name I like. VNet. Like VNet, this is an ADR. Okay, it's an $8 stock here, but this is up there with Baba as far as an AI player. This VNet, right up there with Baba. You see it mentioned with Baba. So if you want like China AI exposure, right, and you don't want to buy Baba, this one's right there. GDS, VNet. Like, this is a big name out there. Big name. This NBIS, yeah, I think it goes higher. I wouldn't chase strength. I try to buy dips. I just, me, I hate talking about a stock that's doubled as far as new money, but there's a lot of interest in this name. A lot of interest in this name. This too gets mentioned with some big names, this NBIS, CoreWeave and stuff like that. So I think put it this way. I think these type of names off any pullbacks, that's where you got to really keep an eye out for a call line. That's where the opportunity is in these type of names, because I think there'll be the demand's not going anywhere for these names off pullback. Just be careful chasing strength. Again, because it's doubled. It doesn't look like it on this chart, but the stock was 20. It almost hit 60 the other day. The big move. A few people in the steam room nailed this thing. Here's another one that looks really good. That caught news today. BE. Look how good that looked coming into today. Yeah. See, but these are all names, guys, like over the last couple of months, you guys have been pounding the table on. You just don't want to climb the ladder. You own a BE, like again, some of you do. I know Joe in the room owns it, I think from $20. Up here at 35. We got to be smart about it. Because if a rinse shows up, these things are going to rinse. And that's where you want to buy. Holding NBIS from 33. I mean, you're up 20 points. So, like, you got that cushion. I wouldn't sell. But, would I buy it up here? I'd try to buy it off pullbacks. But it doesn't excite me as much. But, it looks good. Flow-wise, looks good. But you guys know me. I'm really conservative when it comes to chasing strength. I just don't feel comfortable. Unless I'm, flipping it. BB, yeah, I don't know about that. We're going back. You're taking me back into my my prime here with this BlackBerry. Mostly spec flow, but I don't know anything else about it that I can share with you. FFAI, this is strictly spec squeeze name. Like these type names don't interest me much. I'm not going to lie. These type names don't interest me much. Like it's not even that I don't like the speculative part of it. You guys know I like the speculative part of it. This is solely running off being squeezed. Period. Like NBIS, you get squeeze and you're getting real buying there. A lot of these type names, this FFAI, is just short hedging and squeezing going on. Now, you see, this thing can squeeze hard. Look at this. 1 to 4. But make sure you get out if you catch it. Make sure you get out. What other flow we've been seeing? A lot of these mineral-related names have been really, really good. On the spec names, TMC was kind of like the first was this, right? MP. This was kind of the quote-unquote class of the group, right? This was the go-to name. And then we started to see like some of these deep sea divers, TMC. Struck in the chat there I think he owns this as a spec play, Omex, that does similar to TMC. These are really cheap stocks here. We've been seeing a lot of action in these names, the uranium names. Look at these moves. UEC, and here's another one, NXE. This one looks a little bit better setup wise, but they usually move in a pack. But you already, right? You got some killer moves here. 6 to 10 in a week. 6 to 10. METC, this was a huge winner. That's another one. Look at this. Double. More than double. So, this is an area of the market that interests me, though, because there's a story behind it, right? They're speculative, but it's not short squeezing solely. There's a story behind it, these mineral plays. So I'm interested to see if there are new names that show up in this arena here. Let's see if we could see some have some aggressive sweeper activity in any new names that fit this bill. But a lot of big winners, in this arena. SMCI, I think it goes higher. You got earnings coming up. I have no idea about earnings, just being honest with you. I don't think anybody does. But if it's where it's at post earnings, I think it goes higher. We've seen some bull flow in it, and it's been grinding higher. So it looks good. SG, that had a nice squeeze. I played it, but I got out. Before this squeeze here. SG, sweet green. These are the food names that have been under pressure, but you had this. Here's the earnings risk I'm talking about, guys. Here, look. Chipotle. You had earnings, awful. It took down the whole group. That's the risk now, the added risk in the market now, right? So like Sweet Green, they didn't report, but because of Chipotle, look what happened. So that's why, Stace, I think you got to be a little more careful for the next few weeks here because of that risk. But again, these names, here's how I would look at it, right? This is right back down into this kind of floor. If it hangs around here and there's another round of sweeper activity, I think it's worth a shot. But I don't know what earnings are going to look like. I have no idea. I have no idea what earnings are going to look like. AMD, yeah. Again, one of these trades, it was tough though. You know what I mean? Because this went a lot lower than any of us thought. But now that momentum has shifted, and I mean, would it shock you? AMD's trading at new highs at some point. It wouldn't shock me. No, it wouldn't shock me. But yeah, it looks good, man. Looks good. I saw a couple of good-looking names posted. COHR. Wow, yeah. This is a good company too. You know what's a great stock that sweepers buy every dip in? This, Celestica. They buy every single pullback whenever there is one in this name. They bought, I remember here, look, the circle's still there. And then coming out of April, this was one of the first growth type names that they were buying. If I'm not mistaken, it was somewhere around here. But it's a great stock, numbers wise, everything. Like, you're talking about legit. Obviously, it's had a crazy run now. Oh yeah, that's a good name too, right? CRDO. This is another one. They like to sell puts in this name too. A lot of support off dips in this name, CRDO. A lot of support. But again, up here now, you get a rinse, you could get a little shake in this. I mean, this literally has gone from 35 to 100 with no consolidation at all. So would it surprise me at some point you get something at the least, right? Like this? At least. You can't go parabolic forever. Right? So if you're holding CRDO, I wouldn't sell it. Even with what I just said, I wouldn't sell it. Because you're talking about an underbelly, hot growth name, real growth, real flow. Those end up being huge winners if you can hang on. It's not easy, but that's the goods. But would I buy it up here now? No, I wouldn't buy it up here. Even with all that bullish, what I just said, I wouldn't buy it up here. You just, you get these runs and you're going to run into some congestion. That's why, we're going to have to see new participants. We're going to have to see new names, or we're going to have to see rotation of some sort for some form show up over the next few weeks for the rally to continue without some sort of digestion in the indexes. You know what I mean? Because you're going to have a lot of these type names needing to digest. Right? Even names like this, Oclo. And it's totally normal. It's not bearish. It's normal. CLS has a revenue of $9 billion a year. It's unbelievable, right? Huge name. They're real. You know what's another stock that nobody talks about? That's ridiculous. This PWR. I told you, a buddy of mine is in the game, manages money, big money for clients. He's been telling me about this. You probably heard me talk about this name for ages now. PWR. He said this whole power trade, if you like this whole Oclo, anything that you need more power, right? If any of those other companies benefit, if you think any of them are going to benefit, PWR benefits even more, undoubtedly. Like they're a lock to benefit. Look at this thing. You don't hear a peep about this stock, right? Does anybody talk about this name ever? They did their estimates for $6.5 billion and $2.45 this quarter. Yes, you have to see it. This is a beast. A beast. Yeah, I mean, I give you props. I'm not saying you haven't. You and Goldman have been pounding the table on this whole theme. But yeah, they look strong. That's so if you do get this, right? Again, this is not market correction, right? This is more of a market correction. Right? This is just normal digestion. And if you get that, that's where you got to look for entries in these things. Just for me now, the thing has doubled. Upside gets more difficult. Oh, yeah? I didn't know that. Puerto Rico. Wow. I didn't know that. Puerto Rico. Later struck. So what else? What else is there? People have been talking about the home builders. We're not going to see necessarily new names there, but they finally have been catching a bid here after being bidless for a good year. So again, they report, but that's good. I think it's good that they report, because if you get any weakness, all right, so DHI, you got a pop, you got Lennar, KB Homes, all those names, right? They report, you get them out of the way, and they start to buy these things. You got a lot of runway here, right? A lot of runway. And if you want to live dangerously, you pound the nail. This thing could get funky. This is the triple levered home builder ETF. So if they start to catch action. Madden, you're talking about CRDO to put selling keeps you in? Yeah, I'm being honest. Like I wish I had CRDO. If I had CRDO, if I had a piece there, I wouldn't be selling it. I wouldn't be selling it. When you got earnings, you got some real growth here. They're profitable. It's obviously expensive, but if they start filling in the numbers to this growth, like, you got to understand, right? Like, they start here. They were earning 4 cents a share, 7 cents, right? 25 cents, 35 cents. They're 35 cents for this quarter they're looking, right? Now, then you start to see 50 cents. 75 cents, $1. You know, that's what you start to see from these strong growth names. So the multiple looks crazy, but the growth is there. You understand? The multiple becomes a problem when growth slows. Oh, that's another name, right? Powell. I know that stock, Powell. Oh, yeah, that looks good, too. Look at that. Look at the numbers on these things. They're behemoths. Wow. This looks good. EME, that's another one. That's a beast, MCOR. Beast. Well, beast. Again, the only thing, right? The only bearish thing you can say is that this has played out here now, right? It's not like it's not early. Now, some people think it's early in the fundamentals, but I'm talking about in the price action, right? If you want to see this, like here, right? You want to see at least something like this here. That should be coming up. Right? Like you get parabolic sideways. Then another rip, then you had the market correction. Right? Even here, big run, digestion. But in that digestion, if you like these things, that's where you got to look. But again, if I already am in the name with a cushion, I'm not looking to sell. TLN, that was the news that took the group higher the other day. Look at this monster. Yeah, they're all big. They're all huge winners. Patrick, CSX, you had a reversal today. I think people got a little disappointed that CSX wasn't in the mix of this chatter going on. But I think that's what the action was all about. If you remember, to refresh everybody's memory, CSX, we were seeing strange buying because it was lotto type action, speculative type action with time. So what they were doing, they were buying Jan calls for cheap premium, out of the money Jan calls. And you don't see that in these type of names a lot. When institutions buy these names, they usually buy, deep in the money or close to the money, high delta. All right, so they almost like treat it like equity. That flow that we were seeing, the takeaway from that was like speculation. They were looking for something, right? They were looking for something. And I think that's what they've been looking for. This chatter now in the whole space. UNP is looking to buy NSC. Is that what it is? Something like that? So, from here, I don't know, I think what you would want to see from here, Patrick, in my opinion, is some digestion now. And we see a wave of good-looking buying. That would be ideal. So if you get something like this, and then all of a sudden, in August, you see Jan, Feb, high delta sweeps. And then you got to play for breakout. That's how I would approach it with the CSX now. Because the chatter's out there now. You know what I mean? Now we know the reason for the buying. That buying. Yeah, there's some interest in these names. RKT, Free. But guys, I think it's just rate cut plays. Like, not the, I think what I'm saying is you need rate cuts. I think as rate cuts, the more they get priced in, that's when you see a bid in these names. And then when rate cuts get priced out, that's when you see sellers show up in these names. They become rate cut proxy plays. RKT, the biggest one. But there's been buying in it. There's been buying in it. Again, I think it falls into that category. You don't want to chase. You want to buy pullbacks because they show up, right? Like if you think eventually we're going to see rate cuts, you buy pullbacks in this. The one Madden's talking about, we've seen insider buying in as well. So it might be better like tuck away names. You know what I mean? Try not to time perfectly via short-term options and buy pullbacks or dips to take advantage of for longer term. All right? Because I think the big money, the big trade, I think the reason why you play these names now, you don't look to trade them. It's not worth it. There's better momentum elsewhere. What you should be looking for is to catch the carving of the right side of this chart out. You understand? Where this goes from out of favor to now this group comes back into favor. And then there's something to get excited about. Because then, right? So like if you're buying in this mess, right? So if you're seeing insider buying or you're seeing sweepers come in on dips, you're seeing support, you buy, you try not to trade it because it's too difficult. You give yourself time, not for the short-term money, but to try to catch this. Bink. And that's where the reward is worth that risk. No, which one? TM. Oh, that's thermal fishing, isn't it? Yeah, thermal fishing. You like this? You're saying? Let me see. Didn't they report too? Oh yeah, look at this out of favor. Yeah, man, there's a whole market full of names like this, man. And again, is this right, Madden? You know the game. Look at this run over how many years? This is normal. This is normal. Jesus, what a move. IQV. Oh, is this one getting out here? Yeah, same thing. These are rotation names. I'm adding. Yeah. And, it's good because they're long in the tooth. They've been in this digestion for a long time now, years. So the probability starts to head into your corner. Because these aren't garbage names. These are legit names. They're not going anywhere. They're profitable businesses. These are real businesses. So I get it. I definitely get it. Reddit, you got earnings. I think you could see a squeeze possibly ahead of numbers. When is it? Coming up though, right? Let me see. August. Oh, the 31st. Yeah, it's going to come down to earnings. Like I really, Joel, I'm not going to even lie to you and tell you I can predict earnings. If I could, I wouldn't be talking to you right now on here. You know what I mean? Like, you get something to get excited about out of the quarter, and you can see a crazy squeeze on this thing. You know what I mean? Crazy. Because it's been pent up and a laggard here. Like they get excited out of the quarter, you get new highs. And that's all $90 away. So risk reward wise, I don't know what the IV is, probably junked up. But risk reward, if you like, it's worth a shot. But it's a crapshoot. Earnings are a crapshoot. Don't let anybody fool you. It's hard. It's difficult enough to predict earnings itself and then predict the reaction to the earnings, and not even the earnings, the guidance. Right? You see post-market initially, stock goes up, they beat estimates, guidance was weak. They stock reverses, sells off, and then in the conference call, something bullish comes out, then it goes higher. Yeah, nobody has a clue. But yeah, again, as a gamble, worth a shot. I just wouldn't go nuts, obviously. BMNR, somebody mentioned. What is this? This is a high flyer. There was I think there was stock replacements though. I think there was a call spread there today. BMNR. But yeah, this, in this stuff for me, strictly trade. This reminds me of this. SBET. So, and this is what I was explaining, right? Again, this is just me, preference-wise. Got nothing to do with the company or what they do. I couldn't care less. I'm not trying to get into a debate over that. What longer term, their business or whatever. Okay, I'm just talking about flow and setups, right? That's all I'm referring to. Down here, after this retrace, you had sellers dry up, and you could see a floor be put in, right? It's a dead stock after that whole air came out. Then we started to see call sweepers show up. Risk reward wise, for a trade, you're not going to get an argument out of me here, right? That sweepers are tipping you off to some momentum coming in, but personally, I would sell into that momentum or roll and leave a piece. Right? I would take off a lot of risk into that momentum. Because of this, pump and dump pattern. Okay? So I actually did play this. I sold really early. It went a lot higher after I sold. But, these names, it's all momentum. It's all momentum. So now it's retracing again. It kind of goes dead and you see sweepers come in again for a trade, it's worth a shot. Like this is what I put in that category here. So if you see some sweeper activity that kind of sticks out and it shows up here, maybe it's worth a trade for a quick pop. But I don't know anything else about it, ARC acquires, was this Bitmine? I don't know. I don't know anything about it. Oh, is that what they do? Treasury free. That's going to be the death of us to heal all these companies. Listen, as bullish as I am, right, and I'm put in the perma bull camp, I'm telling you right now, when it comes time to pay the piper on all this stuff, it's going to be ugly. And I mean ugly. We avoided it in 2022. That's what I was concerned. I thought 2022 was the start of it and the death of it all. And we kind of, I think, got lucky in a sense, right? No recession, no job losses. Because once shit cracks, all this stuff, when the music stops, man, I don't know how you find chairs with all this stuff. Everything's all fine and dandy, right? When things are going higher. No one ever sees the risk. Madoff got away with murder because the market went higher and there was no recession. As soon as things start to crack, that's where it all shows up. And I don't see this whole menagerie. I don't have a big enough brain to wrap my head around this stuff. I just don't see how it can be orderly. I just don't see it. Yeah, exactly. We just got to keep pumping. We got to keep pumping. By the way, that's another thing I didn't even talk about early on in this webinar, which I think is right up there with anything else we look at. Liquidity has been ridiculous. You want to know why there's all this spec action? Have you looked at a measure of liquidity? Have you looked at any liquidity indicator recently? it's gone parabolic. I don't, I know where some of it's coming from, but whatever the case, I mean, here. And this is what it looks like now. Kind of that M2 global liquidity indicator we look at, amongst others. But here's just a simple measure of what it looks like. Hold on. All right, and this kind of what's it called? It goes out forward, so kind of forecast a couple of months ahead. Look at this. Okay, so I'm not looking at this and trading solely off this. You guys know that. But this is like when all those buy signals are lining up into April Liberation Day lows, right? And everybody on Twitter is, are you tired of winning yet? And trolling Trump and bearish as all hell. This thing got shot out of a cannon. Out of a cannon. Okay? Because again, not lags. What's the opposite of lag? I'm trying to think of the word, but you guys know what I mean. See how it's out to September? So it leads. It's not a lagging indicator. And as you can see here, the beginning of April, this thing, I don't know what happened. Okay? I don't know what happened in April. But it went bananas. Look at this. Yeah, front run, right? I'm trying to use my vocabulary here. It's not too good. But you guys know what I'm getting at anyhow. Yeah. Don't get wrapped up. I'm a moron. Don't worry about me. But so, this has been screaming risk on for a while now. Now, I'm waiting for this to show up, right? When we start to see this, we had little dips. But when we break trend, it's going to be interesting because the correlation, especially to like Bitcoin, is extremely high. Okay? When this goes sideways, right, it kind of breaks down a bit, risk assets, the speculative fever in the market breaks. So when it does, we'll obviously know about it because we'll be talking about it. And like I said, it leads, it don't lag. But it's amazing. I don't know, like what the hell's going on? Like you ever wonder, right? Like if you look speculative assets, Bitcoin, this is the number one Bitcoin indicator on the face of the earth. I'm not even a Bitcoin trader, but if you don't look at this and you're trading Bitcoin, you're out of your bird. The correlation is ridiculous. Like you remember, and Hill, you remember, I was shocked that Bitcoin didn't break out even more. Like this, I don't know why Bitcoin did this. Like that was weird to me. Because like again, you look at like these liquidity things. This is a parabolic move. So who knows? Maybe Bitcoin hasn't even gone parabolic yet. That would be scary, huh? But yeah, so just another thing, right? You got underexposed positioning out there, and you got liquidity, a tailwind like this. It's hard not to be bullish, guys. It's hard not to be bullish. And you guys heard me make this point. When liquidity is not a tailwind, okay, and think about even like 2022, that bear market we were in, you can't find spec names can't catch a bid. Remember, Sahil, we were talking about it. That's when like Soon started catching initial activity when liquidity was awful, and it was, you know, it was rare to see like a $2 stock see sweeper activity. There's no interest. All of a sudden, I promise you, when this shows up, fundamentals matter again. That's what happens. You start to hear people talking about earnings and this and that. The story doesn't go anywhere. You can't buy just off a story. But this is what's going on. All right, so this is, I mean, basically what it's signaling is, and again, we don't need exacts, but it's showing us that through August at the least, liquidity still in the bullish column, right? Like you look here, okay, this broke into the end of the year, right before 2025. It started to break down. And the market topped out when? Well, again, I think we were chopping around for 2 months, right? But it was kind of tipping you off to some trouble on the liquidity front going into early 2025. You know? And, fungal. And, you know, this is what Bitcoin did throughout that process. Look how similar that looks, though, right? Look at this. Crazy. Yeah, yes. SIVB, same thing. You get these behind the scenes shenanigans. I should say here. Who knows what Powell did with Trump today? It was comedy what's going on there. Did you see that? In front, like these guys don't go behind closed doors and talk business. They're talking out to the public like that. Maybe Powell's like, listen, I can't cut rates. It's not going to look right. I got to save face, but I'll take care of you. I'll do a little of this. I'll do a little of that. A little yield control over here. A little over there. And one last point, and we can wrap it up today. Why is everybody making such a big deal? Like, Trump is Trump. We know how he is. He talks shit. He's a moron, right? But why is everyone making a big deal about Trump wanting somebody who's going to accommodate his policy? They're like Fed independents. Doesn't the president pick the Fed chairman and the Fed members? Right? Am I mistaken? Didn't Biden pick Yellen, and Yellen is going to run policy to accommodate Biden? Isn't that the way it goes? Why is everybody up in arms about, Trump might fire Powell? He don't want Powell. This is a disaster. What are we talking about here? There's no Fed independence, my ass. Right? You think Yellen didn't run Fed policy to accommodate Biden? Biden elected him. People don't elect you, right? If you want Fed independence, let them get voted in by people or something. You can't have the president appoint them. Yeah, a lot of bullshit. You know, it's so funny because this is that crap, right? See here, like I don't get political. I really don't have a side in politics. It doesn't interest me enough. You know what I mean? To get debatable about politics. But the stuff you hear about, like on media and shit like that, it almost pushes you to side with the other side. That's how ridiculous it is. You know, I find myself like arguing for Trump just because of how ridiculous the media portrays some of this stuff. Yeah. Well said. It's all noise. The last shit you want to pay attention to is that stuff, right? Because you hear, Powell's going to fire Trump. Oh, he's not cutting rates. He don't like Trump. You would think liquidity is awful right now, right? You would think you can't buy risk assets. Trump and Powell button heads. Meanwhile, you got this thing. You know? And again, last point, right? Think about all that into the April lows. Everyone getting wrapped up. Oh, Trump don't know what he's doing. He's going to break the economy. These tariffs. They forgot about Trump 1. What he did the same exact thing. They forgot what happened. Or they tried to make you forget what happened. Yeah, it's just insane. But so he'll hit the nail on the head. You definitely don't want to pay attention to it. That's for sure. Right? Because it's not going to, it doesn't play, it doesn't, not in the plus column in the least bit. All right, my friends. I'll leave you at that. Okay. Again, let's, we want to be smart about things. Don't get stupid out there chasing names that have gone bananas. I think if you stay nimble, tactical here, trade, but try not to get caught with too much weight with earnings risk and all that on the table. Let's see how the first, the next 2 weeks of earnings play out. And hopefully on these future webinars, we start to see some post-earnings buying show up. And that's where it's going to be, where it's at. By the way, here's one name to keep an eye on, that there was some post-earnings buying into the dip. ISRG, Intuitive Surgical. They did a little buying yesterday into earnings weakness. The last time we saw buying coming out of weakness or consolidation was here. Okay, so I would definitely keep an eye, if you have an interest in this name, on the flow. If they start legging into this thing, it's already been in consolidation after a nice run. This stock is a beast. It's a quality name. So something to keep an eye on. Because again, this is totally normal. Got a little overextended here. So that's some of the, not many names already reported. You had banks and some of these names like this. So that's what I'm kind of keeping an eye on over the next couple of weeks here. Yeah, girl traders, what about me, girl trader? You hear the ticks in your sleep? Can you imagine what I hear in my sleep? That's why you see me tweeting at 3 o'clock in the morning every morning. I hear my squawk guy talking to me in my sleep. That's funny, though. You hear the ticks. That's why I lost my mind a long time ago. All right, everybody. Enjoy the rest of your evening. For those of you not in the Steam Room, have a great weekend. I'll see you guys next week. And Steam Room members, I will see you mañana. Have a good night, everybody.